The big story breakdown, while U.S. stock futures are in the red after hitting new records last week, federal prosecutors are opening a criminal investigation into Fed Chair Jerome Powell. Now, the S&P 500 rose last week 0.6% to finish at a record high. The Dow closing at an all-time high, while the Nasdaq Composite jumped and were led by a rally in semiconductor stocks. Well, all eyes are on earnings and economic data as we head into the trading week, and of course, announcements coming out from the White House. Well, joining me here at the New York Stock Exchange as we kick off a new trading week is Peter Tuchman, senior floor trader at TradeMas. Good morning to you, Peter.
Good morning.
Well, we are looking at red across the board for U.S. stock futures, and the U.S. dollar is pulling back as well. But what do you make of what we're seeing this morning?
Look, we've got to realize that, January is a bit of a quirky month, right? You're coming off of a really solid year, a really solid number of years, right? And we're coming into earnings season. You've got a lot of stuff. There's a lot of animosity going on between the president and Jerome Powell that caused a little bit of uneasiness. And, we know that one of the main things that people are looking at is the interest rate story. And what is the trajectory going to be? When are they going to transfer Mr. Powell for a more dovish Fed chairman, and what do the numbers look like as far as that? We are starting to get some of the economic data trickle in from September, October, November, December, which we really haven't gotten, right? So we're just finding out there were periods of time where we thought the economy was actually doing a little better, so there in the last Fed meeting, not the one where they cut rates, but when the one was that they showed us the minutes, they said there was so much discord between the Fed governors that they almost didn't cut rates at all. Okay, and so one of the most powerful things about that is that if you don't cut interest rates, you're going to have the market under a little bit of pressure, right? We've got that inverse relationship. So look, you're going to see, as people sort of position themselves into the beginning of the year, you're going to start to see, some sell-off. I think you're obviously getting some news out, which is putting the banks under pressure.
And speaking of banks, earnings season kicks off. We'll be hearing from the big banks starting tomorrow morning with JP Morgan. Yep. And another certainty that we have is economic data. So on the heels of last Friday's jobs report, we'll get inflation figures as well as some housing and retail sales figures. So what's your focus when it comes to the certainty that we have heading into the week?
Look, that information, which is we have not been made available to us for a while, has left us trading blind. It's literally as if you're on a highway going 90 miles an hour with absolutely no visibility, and then suddenly, you get to see what's going on. So some of it's up-to-date information, and some of it's what we did not get from September till now. So we've got to put that all in perspective. And as I said, what we noticed at the end of last year was that the large players in this game have very interest rate sensitive portfolios, right? When we saw that interest rate probability spike down to 15%, and that strange little thing that happened in November, market sold off aggressively. When we rallied back up to an 88% probability, the market rallied. So we know what the market is looking for. And so now, I would imagine a little bit of the pressure is the fact that the economic data that got revised on Friday was positive, right? And if it's positive, we are then less likely to cut interest rates. If we're less likely to cut interest rates, people will be disappointed. Higher rates for longer doesn't benefit anybody. It's going to affect the inflation numbers, and that could be putting a little pressure on the market.
Yeah, and it's hard to believe that we're just kicking off the second full trading week of the year, of the month, given all that's happened so far. So last week there was focus on geopolitics, and right now there's a lot of uncertainty in terms of how all of the announcements from Washington, D.C. will actually shake out. So what do you make of the uncertainty, and what are you focused on? What matters?
Look, I think that at the end of the day, earnings are the lifeblood of this market. When all the rest of it is just noise, right? At the end of the day, what is going to move stocks? What is the foundation of stocks? It's how much money they're making. What do the revenues look like? And what does guidance look like? So interest rates are some of the most powerful part, and then earnings are really that's the core stuff. So, at the end of the day, all the rest of it can be noise. But if companies are making money and they're projecting solid earnings and guidance going forward, then that's going to hold the market strong. The rest of it is going to be emotional reactions. Market's going to be up on some economic data that comes out, or be down on a tweet. As I always say, we're one tweet away from crazy town. So we've got a lot of stuff coming out of Washington. There's a lot of posturing going on with the president, especially around what happened in Venezuela and around, that oil game is a very tentative one, because you're playing with some of the most powerful players in the world, right? That's why I sort of stay away from that energy sector, because you never know what people are going to do. The Saudis don't call me when they're going to dump a lot of oil onto the market. We know, obviously, by taking over Venezuela or whatever we did do, they've got $7 trillion in assets there in oil, let alone the largest silver deposits, some of the largest gold deposits. that's gonna shake this market up a little bit in a lot of different ways. So you know what? I'm looking for earnings. I'm looking for solid earnings and guidance, I think, and that plus a little bit of the tentative stuff around interest rates going to make the market either go up or down.
Yeah, and speaking of which, it'll be interesting to listen in on the earnings calls, especially given everything that's happened so far, and to hear from the executives regarding the landscape moving forward for 2026. But finally, I do want to leave it with price targets. What are you watching?
Well, obviously, I'm looking for a 7,000. I do have the hats printed up. I'm actually getting them this morning. I'm looking for the S&P 7,000, and I'm anticipating it very soon, and I'm looking for a 50,000 on the Dow. We actually got really close. We were within 500 points on Friday in the Dow. We were within 27 points on the S&P 500, so we couldn't be closer.
Yeah.
And at the end of the day, some people say these are just numbers, but 50,000 on the Dow. When I got here, the Dow was trading at 6,000. It was 137 years ago. The S&P, I don't even know where the S&P was trading. So these are real numbers. These are real valuations. These are a sign that the market continues to forge higher. It's one of the hardest years that we had last year. Everything thrown at this market, yet we still had 52 record highs. I think that's an amazing thing. This market is resilient. The companies are resilient. The sectors are resilient. And so I look forward to a positive year.
Well, Peter, you and I will be back together at the end of the week on Friday morning, so we'll be able to address all these issues. Thank you so much, Peter.
Happy trading, everybody.